Yes, we do live in interesting times. Can you believe this? Pretty much all the research I've done this morning is out the window. We've made another new intraday high. The impetus in this last buying push up to just below 128, we got a high of 2731.5, is the announcement that the second Dallas health worker has come down with Ebola. Investors like stability. They hate change. They don't know how to deal with uncertainty. And I mean, it's really hard. I mean, when you look at what's going on with this virus that was introduced by this administration's illegal immigrant policy that have taken the lives of one kid in Canada and at least 2 in the United States. And if you look at Ebola right now, we haven't shut down flights from these other countries. We're not quarantining people. You can carry this virus a couple of weeks before you display symptoms. And our government is, reacting with platitudes. The protocols that are in place to handle this at most nations' hospital are inadequate. So right now they're going to scramble and they're going to designate certain hospitals in each state supposedly to handle this. So if you're an investor saying, well, gee, if you look at these infections trees and how far disease can go, I mean, how deep does Ebola get into to our system and where does it stop? And you don't know. There isn't an answer. So if you're thinking about getting out of a stock, you would. It's pretty darn simple. So business and investors like things just the way they are, because at that moment in time, there are strategies that have been successful, and the successful investors are pursuing those to their advantage and their own self-interest. And when you introduce a big question mark, what's happening? Crude oil is in a plunge right now, and we've talked about how when countries, OPEC members, go for market share, they don't care what the price is, and the bottom falls out of the market. And we've certainly seen that in these $1 to $3 plus moves, really straight down. I put up a chart into the room where who feels the effects, who gets to budget deficits based on the price of oil, and Iran is at the top of the list, somewhere over 130 bucks a barrel. I believe Kuwait and I forget the other Gulf state, could have been Qatar, could have been Oman. We're down there in the $70 per barrel range. Those countries that have stock, that have made investments, that have capital, that haven't spent every oil dollar that's come into their country are in a much better position to handle this washout. You'll see the same thing impact in the United States. All these companies that have borrowed a ton of money to complete wells. It takes a lot of money to frack and do this, to leverage a buyout acreage to drill in the future. The price goes low. They will get they make working capital loans. When the working capital of these companies go to zero, the banks call them up and they have to liquidate assets, or they go into receivership. We've seen this in the 80s extensively through the oil patch. So price of crude oil and the third Ebola patient are being blamed for the selling that started in V period and accelerated in W period in the stock market, and that's what's taken us up. So 128 is obviously a round number. If we don't get through 128, then probably going to see it in the form of a V-top. You can take a short to retest the breakout in this 21, 24 area. So the first buy is going to be 21 to 25. There's going to be a lot of volatility today, or there could be a lot of volatility today. 17 to 13 will be buy 2. And a lot of it just depends on the direction of the ES. We do have news today that could have affected the market. I don't know if it will now, as people sit back and wonder. It'll cause a knee-jerk reaction, but I think what's going on in the United States, the policies, I mean, everything's in question right now. You look at the average number of sorties being flown in Iraq and Syria, 7 per day. That's not going to do a damn thing. And, you know, get up and you make a speech, problem solved. Only the problem isn't solved when you make a speech. But if you're in the political game, you come in, you make a speech, your ratings go up, your ratings go down. Problem solved by speech. That's the mindset that we deal with. A new law, your staff studies it. They build an elaborate, complicated plan sometimes. Problem solved. If it doesn't work, you ask for more money. That's the problem with it. That's the solution to every problem in our government. More money has nothing to do with waste or policies that actually work. It's just give us more money and we'll fix it. And we've gotten to the point where the money is being borrowed. There is no more money. Growth has stagnated. We're very, very low. Okay, retail sales could have had an impact. The overall headline, minus 1%. A tenth of a percent would be a negative. Ex-auto is the focus, plus 0.3. Ex-auto and gas, plus 0.5. PPI, no one will pay attention to because everybody's pretty firmly convinced that deflation is back. Inflation is under control unless you buy food. I mean, everything's gone up. I looked at some cleaning pads that used to come 48 to the box. Now they're 42 to the box. The price was the same, but that's like about an 11 or 12% increase. I mean, inflation is all around us right now, except for how the Fed keeps score. Empire Manufacturing Index, 20.5. Business inventories, plus 4. No one will pay any attention to that. And in the beige book, they will look at that and see what the Fed's feel is for the regional economy. That comes at 2 late this afternoon. Won't impact the early trading. So Ebola. Is the market's focus right now, and that could pretty well negate. Normally this would be number 1, that would be number 2, and this would be number 3. But Ebola might be the only thing the market pays attention to. Okay, the situation we have is that if this overnight high is not extended, we want to get short to test 20 to 24. And if 20 to 24 holds up, we can get long to retest the high at 31.5. That's the way we're going to have to play it. Looking at the bond, the 30-year, similar situation. It's rallied up. There was a rating service out there that had 143.16, 143.21 circled. We're in the same situation that we're in. The knob spread was holding in pretty well in and of itself, so we're at 9. The breakout came from 4, so 1 to 4. And then 25 to 29 takes us into this volume area, and this is the start of this. This would be leaning against the start of this new move up for buy 2. Basically going to sell failure to take out 16 to 20 and 23 to 27. We're in uncharted territory, so on this particular move, we have been higher than this previously, but this 143.16 is on several people's charts. And for us as traders, if we don't extend and take out 143.16, then we can get short to see where support is. Okay, gold, last night we left the gold market wanting to sell 38 to 40 once again at open, and it went straight down. We had a 30 to 32 buy, then 25 to 27, and 22 held. So we're back to yesterday's numbers. So we got support at 20 to 22, and our 15 to 17. Not getting much of a reaction out of gold off this Ebola news. It has come up off the lows, but again, you know, one of the things that an asset manager has to face is that owning gold, it doesn't pay dividends. It just sits there. While it is a store of wealth and it will protect you, these people are measured in performance, and the gold has definitely been under pressure. We removed that component from the market, so the the market, the large institutional investors are not playing from the long side. Central banks and retail accounts are. So I would have expected more of a rally up off of this Ebola news, but you can see that we didn't get much. We didn't get much. So I'm not going to look to gold to provide much of a pop. Euro, again, the problem on a relative basis, we've got one new case of Ebola in the United States. It was developed locally. It wasn't flown in from out of the country. Spain is the only country in Europe right now that is reporting a homegrown case of Ebola. So on a relative basis, at least from an Ebola standpoint, Europe is a little better off than the United States is as of the start this morning. So I know it's a bit convoluted, but that's the way this works. So we're currently at 77. Our 75 to 85 is resistance. It's sell 1. Sell 2 is 90 to 27. If the selling accelerates in the United States stock market, so this market's liable, it should get up and retest the 127 area. If the worst of the damage is over in the U.S. economy, I mean the U.S. markets, and we've probably seen the rally. 55 to 45 buy 1, and then 25 to 35, allowing them to get stops below the overnight session low would be buy 2. Okay, crude oil has gotten whacked, and the reason for it is just there's more supply than demand, and Saudi Arabia has cut the production back to 8 million barrels per day. And Saudi Arabia rarely goes below 8 million barrels a day, and if you buy or import crude oil, you are going to pay attention to Saudi Arabia. And if they tell you you're going to buy so many barrels a month from them, you'll curtail your buying from your other suppliers to make up for your local demand. It's the way it's always worked. And why? Because they're the swing producer. Okay, 82 and a quarter, sell 1. 50, yeah, we'll make it 75 to the buck, sell 2. I mean, this thing is really oversold. They've never seen values this low. This market could snap back on short covering. with any kind of hint out of Iraq or someplace like that. Buy 1, 25 to 50. Buy 2, 75 to 80. Now, this is on dime increments, so we're really taking a pretty compressed view of the market. Okay, on to the E-mini. Again, every player who had been playing quantitative easing has had to question that strategy. When does that no longer work? And that's added volatility to the market. Long-term investors hate uncertainty. And this Ebola deal, you just don't know how far it's going to go. We have been pointing to a retest of this 55 area, give or take, off the long-term charts. And if we take that out, we're back down to our 35 to 37. So 1853, 55, obviously 1850 is a number. Then it goes down to the 35, 38 area is where we are. So where is resistance? Obviously, our 63 to 65. This low right here, the overnight session low, is 66. So 64, 66, it's very, very aggressive. It's sell 1. 69 to 71 is sell 2. The market could snap back quickly. We're going to deal with a hell of a lot of volatility today. There's no way to get around that. 54, 56 is a question mark. That could hold, so we're going to make our first buy 51 to 49. And if we take that out, I'm going to drop it down to 40 to 42. We got to give it some room on the downside. So it's possible that the selling is over. If we come down and we can't crack and take out the overnight sessions low, then we can look for a long setup to go back up and see where resistance really lies. And if we take a look at this chart, this 84, 83 area, then London starts to sell at 78, 76. So then we have this fill in W period from the 70, 72 area. So 65 to 70 is where we've got our first resistance area. And then 75 to 80 would be our number 2 zone. And frankly, I don't know which one's going to hold. The first trade for us, though, will be not taking out the overnight session low. We can trade from the long side. Obviously, we like the short side better. We're looking to sell into strength. That's not going to change. So our sells are aggressive. We want to get short, see if we can crack 55. If we can't crack 55, then we'll have to consider a long. Buying against 50 is a pretty good trade. It's around numbers. Somebody will cover their shorts there. And 40, 42 is a scoop order well below the market. Okay, a lot of news, kids, on the half hour. It's going to take at least 15 minutes to get everything up and going. The key is, can we take out this 31.5? And if we can't do it, we can trade from the short side. I go through and do a forced tick rebuild. I imagine I'm showing very little in the way of contracts traded on any of my F4 screens. I'll be up as soon as I can.